A very good afternoon to all of you. First of all, I would like to say a special thanks to TaxGuru for organizing this session on block credit. In fact, I'll try my best to understand and make you understand the provisions of block credit in a brief manner. So before we dwell into the intricacies of this topic, let me take a moment and introduce myself. I'm CA Ruchika Bhagat. I'm practicing CA, in fact, for last 26 years, and I have a robust suite of financial specialists who have helped many individuals and organizations to establish their base here in India. I'm also managing director of Books Consultancy Payroll Company, NBC Advisors Private Limited, Neeraj Bhagat and Company Chartered Accountant, PK Chopra and Company Chartered Accountant. I'm member of Institute of Chartered Accountant of India since 1998. I have assisted many of my clients in setting up their business here in India and taking care of their compliances. In fact, more than 2 decades now, I can say, of experience helping their business to grow and to be more profitable. I have a strong and genuine passion for the business growth and sustainability, and have a vast knowledge of working with Indian companies as well as foreign companies across the globe. So in this webinar, I'll be touching the base on input tax credit, how it is available, when it is available, what are the conditions for its availability, then conditions for charging ITC under section 16. We'll also discuss section 17, subsection 1 to subsection 4, that is with regard to the provisions of motor vehicles, food and beverages, insurance, membership of club, then personal goods, the goods that are used for personal consumptions, construction of immovable property, goods that are stolen, destroyed, and last but not least, section 17, subsection 5, that is on block credit. So hope we are going to have an interactive session. We'll be having Q&A at the end of this webinar. So in case if you have any questions regarding the given topic, you can ask me by writing your question in chat box. And in case if you want to share your precious views, you are always welcome. So first of all, we need to understand what is input tax. Well, in layman words, we can say that it is any cess which is charged on goods and supply, or it is any cess which is charged on services, or it is also a cess that is charged at the time of import of goods or services. Similarly, it also includes any cess that is paid or payable on RCM basis. So now come, what is the need of claiming ITC? Why we should claim ITC? Well, this concept of ITC was introduced in GST in the line of OECD guidelines that the burden of tax of any value addition tax system should not be borne by the business. In fact, it should be ultimately borne by the ultimate consumer, that is end consumer. So based on that, ITC credit was introduced by the government. So in light of this narration, we can say that ITC is available on taxes that have been paid with regard to forward charge mechanism, on taxes that have been paid with regard to reverse charge mechanisms, taxes that are paid on import of service, again under reverse charge mechanism, or any tax that has been paid at the time of import of goods, that is whenever you file bill of entry. So starting with section 16, subsection 2 of GST, it lays down the condition, that is when and how the registered buyer can claim ITC. So when we talk about this eligibility conditions, so first of all, the condition arises is that the goods and services that we have purchased or we are receiving the services, they should be related to business purpose. It should not be related to other purpose. So when I say other purpose means they should not be related to any personal uses. Similarly, whatever input tax credit I am availing, it should be supported by tax invoices, it should be supported by debit notes. So documenting, evidencing the payment of tax or payment of purchases should always be there. Similarly, the supplier, he should file tax invoices in his GSTR1. Similarly, buyer GSTR2B should be showing all those invoices. ITC reported under section GSTR 3B it should be actual as per the ITCR in GSTR 2B. So earlier there used to be a provision, that is we can claim a provisional ITC that is up to 3% of ITC which is available in 2B. But now notification has been received by the government. So now ITC can be claimed only and only to the extent the input that is available in 2B. So we cannot claim excess input tax credit. Similarly, we also need to check that the actual payment has been done. While making the actual payment, it should be noted that goods also have been actually delivered. So if in case the services are being provided, so it should be provided actually to the buyer or any other person who is authorized by it. And the buyer must furnish his GST returns in the form of 3B. So what if the goods are transferred in lots or installments? So if in case the goods are distributed in lots or in goods are distributed in installments, then in that case, ITC will be liable or it can be claimed when the last lot or the last installment is received. So these are the basic conditions. Apart from this, we also need to check that the payment must be made within 180 days from the date of invoice. So some of these conditions are prior conditions for claiming ITC. Similarly, when we talk about section 16, subsection 3, section 16, subsection 3 talks about capital goods. So whenever I being assessee, I purchase capital goods, I need to pay input tax on that. So this input tax, whatever I have paid, I have two options to deal with this. One, I can capitalize the entire expense of cost of capital goods along with the input that I have paid. So in this case, assessee will be getting the benefit of depreciation under Income Tax Act so that he can reduce his profit legally under Income Tax Act, and ultimately he will reduce his income tax liability. But simultaneously, if possible, what he can do is he can avail ITC if it is available. Again, I'm saying if it is available, because at times it happens on certain exceptions. In case of certain expenses, ITC is not available on capital goods. So if ITC is available on capital goods, then in that case, assessee can claim that ITC on whatever he has paid on capital goods. So in this way, he will be able to reduce his output tax liability that he is paying in cash. So these are the basic conditions that we should discuss before claiming ITC. Apart from this, we should also keep in mind section 16, subsection 4. That is, it describes the time limit for claiming ITC. So any registered person is not eligible to claim ITC on supply of goods and services, on invoices or on debit notes after 30th November of the financial year or the date of filing of GSTR 9. So whichever is earlier. So if registered person, he do not claim ITC within this prescribed limit, they will lose the right to claim this ITC, and hence ultimately it will increase the tax liability. So coming to section 17, subsection 1, it talks about purchase of goods and services that is used for personal as well as business purpose. As I have already discussed that ITC credit is not available on personal goods. So what if I purchase entire lot and that lot is being used partly for personal purpose and partly for business purpose? So in this case, if I'm using my purchases or supplies for both the purposes, then they need to be documented separately, first of all. And ITC is available only and only on the goods or the supplies that are used only for business purpose. Similarly, if I do a combined supply for taxable supplies along with exempted supplies. So here when I say taxable supply, it includes my zero rated supply also. So if there is a consolidated inward supply or consolidated tax for the supplies that is being used partly for taxable supply and partly for exempt supply. In this case, again, ITC will be available only for taxable supplies, which again include zero rated supplies. So we need to consider all these points before claiming ITC. Coming to section 17, subsection 5. So section 17, subsection 5 is an overriding section. In this section, any input tax credit that is falling within the provision of this section shall be disallowed irrespective of the fact it is allowable under section 16 or it is allowable under section 18. So normally if we say this, we have done this expense specifically for purchase of for business or for furtherance of business, then also if that particular expense, ITC on that expense is disallowed under section 17 subsection 5, then it will be overriding section and it will be disallowed even if it is allowed under section 16 or 17. So coming to the important section, that is section 17 subsection 5. So now we'll be discussing all the provisions of section 17 subsection 5. To begin with, let us discuss proviso A. So proviso A states that no ITC will be available on purchase of motor vehicles that is being used for transportation of person having sitting capacity up to 13 persons, including driver. So point here to be noted is, even if the vehicle is being used in the course of or for the furtherance of business, even if it is used for daily commutation, that is to and fro, by the employer or by the employee, still this benefit, that is ITC, will not be there. So obviously, yes, every provision has its exceptions also. There are exceptions to this section. So the exception here is, in case if this motor vehicle, it is being used as transportation of goods, or it has a sitting capacity of more than 13%, or it is for the supply of motor vehicles, that is, if it is being used by automobile, or it is being used by retail shops, showrooms, or manufacturing establishment, car dealers, then in that case, they can claim input tax credit. Similarly, if it is being used for transportation of passengers, so when I say transportation of passengers, that is car and bus rental or lease services. For example, let's say Volvo company, they purchase a motor vehicle and then they put this motor vehicle for transportation of passenger. So in this case, Volvo company is going to get the input tax credit. If this vehicle is being used for imparting training on driving, that is driving schools are using this motor vehicle, so they all can get ITC. These are the exceptions under this. So when I say motor vehicle, we have gone through that any ITC on motor vehicle is not allowable. Then we have seen the exceptions also. But question arises, what is exactly motor vehicle? So when I say motor vehicle, means any vehicle, obviously, which is not manually, which is not driven manually, it is driven mechanically. One thing that need to be noted, it should be used, or it should be made to be used on road. It should be not used in closed premises. And if in case this motor vehicle is less than four-wheeler, then it should have engine capacity more than 25 cc. So as I have said, that ITC is available on transportation of goods. It is not available on transportation passenger vehicles. So it may be noted here that the actual usage of motor vehicle is not relevant. What is relevant here is the purpose for which the motor vehicle is actually designed or approved. For example, if I have purchased a motor vehicle for passenger and I am using that motor vehicle only and only for transportation of goods, so am I liable to claim ITC? Answer is no. I cannot claim ITC on this, because again I repeat, the purpose for which motor vehicle has been designed or approved is more relevant to check whether ITC availability is there or not. So ITC would not be available or blocked simply because of usage. This need to be considered always. Similarly, I take another example. I purchased one car for my personal use. No ITC is there. but later on I put that car for driving school, like I'm making people learn how to drive a car. Again, as I said, am I eligible for ITC credit? Since now this car is being used for driving school, answer is again big no. Because the purpose is not important, the design for which it has been made or the basic suitability for it is more relevant for that. So if any motor vehicle that is designed for carrying a passenger and it is being used only for transportation, as I said, then ITC is blocked in that. Similarly, when we talk about a sitting capacity, as I said, sitting capacity should be up to 13 persons. So let's assume a case where the sitting capacity is more than 13%, but at any moment of time, it is only 8 persons are sitting in that motor vehicle. So what if, am I eligible for input tax credit? Again, answer is no. We need to check the approved sitting capacity by the regional transport authority. It is not actual usage for which whether that is being used underutilized or it is being overutilized. That is a separate issue. So we need to check a approved sitting capacity, and based on that approved sitting capacity only, block credit is available. Similarly, when we talk about the further supply of motor vehicle, so here we need to know that the word is further supply of motor vehicle, not sale of motor vehicle. Why I am stressing on supply is because supply is defined under Section 7 of CGST Act. And the said definition is very wide one. It includes sale also, it includes lease also, it includes rent also. Therefore, if any motor vehicle that is being purchased and is used for renting, then ITC will be available on that. So there is a lot of confusion between the people. Like people normally get confused between the renting of motor vehicle and a vehicle is being used for purchase. So ITC on renting of motor vehicle is disallowed only in those cases where ITC on purchase is also blocked under Section 17, subsection 5 that we have already done. So in this light, I can say that any motor vehicle that is being used for transportation of goods, or if it is having a carrying capacity of more than 13%, or it is used for transportation of passengers, or it is used by the training schools, or it is used for further supply. So in all these cases, renting of motor vehicle, ITC will also be allowed. There is also a circular, that is 177, that clearly distinguish between the transportation of passengers and renting of vehicle that is being used for transportation. So if I am using a motor vehicle with the operator for transportation of passengers, then it will fall under the heading of 9966. On the other hand, passenger transport services, they fall under the heading of 9964, which covers the passenger transportation services over a predetermined routes or over predetermined schedules. So reason why this difference is important is because ITC is blocked on renting and leasing of motor vehicle, whereas the vehicle that is being used for transportation of passenger, there is no ITC blockage there. So coming to next section, that is section 17, subsection 5, clause AA. So this section is very much similar to section 17, subsection 5, clause A. The only difference here is there we were studying about motor vehicles. Here, instead of motor vehicles, we have vessels and aircraft. So the term vessel and aircraft, it has not been defined under CGST Act. But by taking reference from different laws, we can say vessel is any ship, boat, sailing vessel that is used for navigation. Similarly, when we talk about aircraft, so aircraft includes aeroplane, it includes helicopters, hot air balloons, and gliders. So ITC is blocked on purchase of vessels as well as aircraft. Here, private yachts, boats that are used for leisure or business purpose or by tourists, they are also covered. So no ITC will be available. But as I said, every section has some exceptions also. So if the vessel or aircraft, they are being used for transportation of passenger, it is being used for transportation of goods, it is being used for imparting training for navigation in case of vessels, again for flying, training of flying in case of aircraft, or it is being used for further supply of vessels or aircraft. So in all these cases, ITC will be allowable. So talking about the services of general insurance, services, repair and maintenance, that is section 17, subsection 5, proviso AV. No ITC will be available on general insurance, service, repair and maintenance of motor vehicle. Here we must check that ITC would be blocked in respect of expenses of those motor vehicles only, where ITC on purchase of these motor vehicles stand disallowed under section 17, subsection 5, proviso A. So this means that the restriction on the relevant expenses for each nature of motor vehicle would come as same as upon purchase of motor vehicle. So when we talk about the expenses with regard to the maintenance of motor vehicle, so if I'm incurring any expense or on repair, maintenance or insurance, and that motor vehicle is being used for transportation of goods, so it means ITC is very much allowable. If it is being used for those vehicles where the carrying capacity is more than 13, or it is being used by those transport vehicles which is being used for transportation of passengers, or for providing training, or for further supply of motor vehicle. So in all these cases, ITC will be available on repair and maintenance expenses. So ITC in case of food and beverages, outdoor catering, beauty treatments, health services, cosmetic and plastic services. So prior to 2019, input tax credit was not allowed on all these services. The only exception that was there was inward and outward supply is same. So if inward supply by the registered person and outward supply, the person who is making both supplies are same. In that case, you can get the input tax credit. So post amendment, that is after February 2019, one more exception was added to this, was if any services are provided by employer to its employee under any law for the time being enforced, that is any labor law for the time being enforced, then in such cases, employer can claim input tax credit on the services provided by him to his employees. So now the question arises, if employer is providing any canteen benefits to its employee, whether that is food and beverages, so whether employer can claim ITC on that or not. So let's take two scenarios in this. In one case, employer has a factory in outskirts of the town, and as per the labor law, employer is bound to provide canteen services to its employee. So in this particular case, where employer is bound to provide services to its employee, all the canteen expenses that are beared by employer, ITC will be available to the employer, provided expenses are beared by the employer. If any part of the expense is beared by employee, then no ITC will be available on that part that is beared by employee. Taking second scenario, if employer is providing any canteen facility to its employees on its own will, without under any obligation or under any labor law compulsion. So in this particular case, if employer is providing such facilities or such services, then he is bound to pay, that is, he is bound to pay taxes. He cannot claim ITC on such services. So let's take each and every service one by one and discuss them in detail. To start with, let's start with beauty treatment services. So when we say beauty treatment services, they have not been defined under GST Act. But by taking reference to section 65, subsection 17 of Finance Act, so it defines beauty treatment as any services which are superficial treatment, that is no major transformation of person is there, as like cosmetic surgery or plastic surgery. So only those procedures which are in nature of treatment done to enhance the beauty will be covered under this phrase. For instance, any acne treatment is being done with laser. As we have already discussed, no ITC will be available on beauty treatments where the inward and but the exception here is in case where inward and outward supply is same, then in that case supplier can claim ITC credit. So lot of industries are there. With regard to this only, I want to discuss where the beauty treatment services are integral part of their business. That is the outward supply in these services, they are not being beauty treatment. For example, in case of industries like television, industries like film, news, modeling. So outward supply, they have something else, but inward supply, for inward supply, they are paying they are paying taxes on beauty treatment. So in this case, obviously, it causes a lot of significant loss to these industries. So still, this is a gray area. It need to be further discussed. Maybe in future, we'll be having some circular on this. Maybe we'll get a resolution. Let's see. So coming to food and beverages, as we have already discussed that ITC is restricted on food and beverages. So we need to understand the meaning of food and beverages first. So coming to the food has nowhere been defined under GST law. But food has a wider meaning. That is, when we say food, it means it can be cooked food, it can be raw food, it can be packed food, it can be unpacked food. In fact, there was a circular number 75 in GST that was issued by CBIC, which states that ghee, edible oil, sugar, bura, pulses, all of these will be covered under food. And in fact, we see the wider definition, then any type of prepared, unprepared, cooked or raw food, all these types are covered under food. Similarly, when we talk about beverages, again, it has not been defined under the Act, but it covers all alcoholic, non-alcoholic, whether aerated drinks are there, non-aerated drinks are there, hot drinks are there, cold drinks are there, everything are included. But Section 9 of CGST, it has specifically excluded alcoholic liquor from the scope of GST. So in fact, there are various case laws that defines the beverages. In one of the case law, it was defined that in case of rasna, they provide only a concentrate. It is not a liquid. So it will not be covered under the ambit of beverages. Similarly, Supreme Court also come up with a case in case of Hamdard, where it's specified that beverages are any liquid that is being used for drinking. And when we say any liquid, it excludes water. So in this specific case, Supreme Court come up with that the beverages excludes water. So now the question here arises that whether can I claim input tax credit on drinking water? Well, one need to understand that this restriction of ITC is on food and beverages. And as we have discussed, water is not covered under this. Even though water is being used by all these industries to make their goods. So still it is gray area, but as per the definition of Supreme Court, water should not, no ITC on water is available. Still, as I said, it is a gray area, it need to be discussed further. So we have done that any ITC that is paid on food and beverages, no ITC will be available on it. Again, as I said, exceptions are there. So first of all, the exception is where the output supply and input supply is same. That is, ITC will be blocked under Section 17, subsection 5 for the restaurant industry. But if I am further providing restaurant services only, so in my case, I can claim input tax credit. But for this, I also need to check a notification simultaneously where there was GST at concessional rate. That is where it said that GST will be allowable where the restaurant services are provided at hotel having a declared tariff of more than 7,500 rupees. So that need to be considered in this case. Similarly, if from a single premises, we are providing both the supplies, that is, we are providing restaurant services also, we are also providing sale of goods also. So in this case, ITC will be available only on sale of goods. ITC will not be available on restaurant supply. So question again arises here is, what about ice cream parlors who sell already manufactured ice creams? Can they claim ITC, or are they in nature of restaurant? Again, lot of cases are there, and ultimately it was concluded that ice cream parlors are providing outward services in form of goods only. So therefore, they are eligible for ITC on purchase of ice creams. They are eligible for ITC on waffle cones or any other expense that have incurred by them. So coming to the outdoor catering, it has been defined under section notification 11, sorry, which means that any services of goods being food or any article that is of human consumption at any event, at any exhibition, conference, marriage hall, whether it is outdoor or whether it is indoor function. So ITC in respect of goods and services, as we all know, is not allowable. But again, exceptions are if the further supply of same category of services or used as an element of taxable composite or mixed supply, then ITC is available. Similarly, where employer is providing such services under an obligation of labor law to its employee for the time being enforced. So, ITC on life and health insurance. ITC is blocked in case of life and health insurance. Again, exceptions are same for both. If the outward supply and inward supply is same. So if any insurance company receives a service for reinsurance company, then in that case, ITC will be eligible for these services. And if the employer is providing such services under any obligation to its employee. So we must know that these restrictions are there. So these restrictions are specifically available on life and health insurance. What about general insurance? Well, there is no restriction on general insurance. If I'm paying any premium or on that premium I have paid any input tax, then I can claim a benefit of that input tax. That is, input tax rate is not blocked on that premium for the general insurance. So when we say general insurance, it can be of any type. It can be of theft insurance. It can be marine insurance, fire insurance, agriculture insurance, any type. So in all these cases, ITC is not blocked. Sometimes it do happens that company take one insurance policy, which has both the elements. It has element of health insurance also. It has element of general insurance also. And company is paying a single premium for both. So whether ITC is available on that or not? Well, in this case, these insurance policies have to be separate documented, and ITC will only and only available on general insurance, not in case of health insurance. Sometimes it also happens that keyman insurance policy is taken by the business entities to compensate their business for against any financial loss that would arise in case of death or extended incapacity of their important member or employee. So in this case, whenever keyman insurance policy is there, ITC is available. Similarly, on the same grounds, where accidental insurance policy is taken by the employer, that is, if against any accident that can occur on the work premises, then again ITC is available on it, because it is purely to mitigate the cost of business entities. So coming to the health services, when we say health services, it means any services which include any kind of diagnose, any kind of treatment, or any care with regard to illness, injury, deformity, abnormality, or pregnancy. It also includes allopathy, it also includes homeopathic, it also includes Ayurveda. So normally, where an inward and outward supply are same in nature, then in that case, ITC is allowable. Therefore, if the health service provider is receiving any services and simultaneously is also providing any services in clinic or hospital, then in that case, ITC cannot be blocked. But as I said, we need to keep in mind the tariff notification also under GST. That is, if they are paying GST at the rate of 5% on room rents, hospital room rents, then in that case, ITC will not be allowable because it is specific. Similarly, if the food is also provided in the hospital, so as we all know, there's no input supply, there's no ITC available on food items. So in this case, again, hospital cannot claim any ITC on the food supply. So what if any person is purchasing or any organization is purchasing any medicines, they are purchasing any band-aids or any other such expense to maintain their first aid box? Whether such purchases, they will be covered under health services and ITC will be blocked? Well, the answer is any expenses that are incurred for maintaining first aid box, they are not covered under health services, and ITC is available on these expenses. So coming to the cosmetic and plastic surgery. So cosmetic and plastic surgery, they are different from the beauty treatments, as they are the medical discipline which is focused on enhancing beauty and appearance through surgical and medical techniques. So ITC on cosmetic and plastic surgeries are not allowed. So it is pertinent to note here that if input tax credit is allowed in case of health services, then cosmetic and plastic surgery, then and output supply is same, then in that case, obviously ITC is available. So when we talk about membership of club, gym khanas, or gym, then in that case, again, ITC is disallowed. So many a times it happens that a business entity, they often take a corporate membership of club or gym khanas, and later on they use these facilities for conducting client meetings, for conducting business meetings. So in that case, whether ITC is available, answer again is no, ITC is not available. Similarly, if any business entity, they pay a membership for any golf club for its directors, again, whether ITC is available, answer is no. ITC is not available. Even though such expenses are incurred for business, that is, they are related for furtherance of business, but still, ITC is not available. On the contrary, if a business entity has taken any membership of any trade association, for example, ASSOCHAM, so in that case, ITC will be available. So if any membership of any association has been taken by the entity, then in that case, since it is furtherance of business, ITC will be available. So coming to section 17, subsection 5, proviso C and D with regard to the construction of immovable property. So as we said, that construction, in case of construction of immovable property, first of all, we need to check that whether the expense that we have incurred, it should be capitalized in the books of accounts, one thing. Second thing is, the property being constructed should be immovable property. That is, it should be other than plant and machinery. So that means in case of construction of plant and machinery, ITC will be allowable. So let's study this in detail and discuss this in detail. So if I have constructed any plant and machinery, irrespective of whether that plant and machinery is movable or immovable, irrespective of whether this plant and machinery expenses are of capital nature or they are of revenue nature, ITC will be available. On the other hand, if I have incurred any capital expenditure other than plant and machinery, and that property on which I have incurred the expense, that is immovable, and capital expenditure is done, then in that case, ITC will not be eligible. Now, I take one more example. If I have incurred expenses for construction of any immovable property other than plant and machinery, and these expenses are of revenue nature, in this case, ITC will be available. So I need to check whether the expenses are of capital nature or these expenses are of revenue nature. And also, these expenses are incurred for property, that is immovable property, or these expenses are incurred for plant and machinery. So coming to the work contract. So work contract means any work that is being carried out in respect of immovable property. Considering that work contract is not a pure service, that is, transfer of goods are also involved in work contract. So work contract means part of it will be services and part of it will be transfer of goods. So if any work contract is used for immovable property, then again ITC is not available. Simultaneously, if this work contract is used for construction of plant and machinery, then in that case, ITC will be available. So as I said, work contract. So work contract and renovation or repair or reconstruction or alterations. So they are basically within the same line. So what if I am paying any GST on work contract that is carried out for repair of factory building, whether ITC will be available to it or not? Answer is yes. ITC is available because when I say this work contract or repair or renovation, it does not capitalize. That is, these expenses are not capitalized to said immovable property. But simultaneously, I need to take care of the provisions of Section 17, subsection 5 also, as there is very thin line of difference between repair and maintenance and construction, that is capitalization. So activities for repair, renovation, they involves carrying out the work on the existing movable property, whereas construction means when originally it was constructed or original expense was done. So by taking an example, like wall plastering. So when the wall plastering is done for the first time, obviously it is done by applying cement mixture, it is done by plaster. In that case, it accounts for construction. It do not account for repair and maintenance. But if subsequently I am doing any wall plastering, then in that case, it is being done on the property that is already being into existence. So in this case, it will be covered as repair and maintenance, and ITC will be available on it. So we need to make a difference between these two. Similarly, in case of telecommunication towers also, ITC is not available. So we have been discussing regarding immovable property. So I need to discuss whenever any builder or any other person, he has done any construction on plant and machinery on his own account, then in that case, it is not available. ITC is not available. So what is basically on own account? On own account has not been defined under GST, but in the ordinary meaning or expression, it means for one own use. So to summarize, we can say ITC will be available on construction of immovable property not done on own account. ITC shall be allowed on the developers or builders who are constructing the property or apartment that is intended to sell. But we should check the GST notification also, because if they are covered under concessional rates, so obviously they will not be eligible for ITC. Similarly, ITC is not available for work contract services when supplied for construction of immovable property, except where input-output supply is same. So we need to take care of all these compliances while claiming ITC. So let's assume a case where a person or a builder, let's say, he builds up a property and he do not want to sell that property. He want to give that property on rent. And he constructed a shopping mall and then he gives the shops on rent. So in this case, is he eligible to claim ITC? Answer is yes, he is available. He is eligible to claim ITC. Reason being, he's paying taxes on outward supply. That is, outward supply is subject to tax. So in this case, he is eligible for claiming ITC. Similarly, on the same grounds, any GST that is paid on expenses towards FSI, TDR, development rights, or in case of joint development transactions, ITC will be available. So we have been doing this exception that if any obligation is there for the employer to provide goods and services to its employee, in that case, ITC will be available to employer. In fact, this was the exception in case of beauty treatment. It was this exception in case of food and beverages, outdoor catering. Then in case of membership of club, health club, fitness centers. And similarly, in case of travel benefits that has been extended to the employees on vacations, such as leave or home travel concessions. So in all these cases, if employer is providing, if employer is incurring any expense and is paying GST, then he is liable to claim ITC. So what about various perquisites that are provided by the employer to its employee in terms of contractual agreement entered between them, whether they are liable for GST? So any perquisite provided by the employer to its employee in terms of contractual agreement entered between them, and in lieu of the term of agreement, it will not be subject to GST. So we need to consider this. Since it is not subject to GST, it will not be treated as supply. So ultimately, no ITC will be allowable on such supplies. Similarly, what happens in case of gift? If employer is providing any gift to the employee, so under the provisions, if the gift amount, it do not exceed rupees 50,000 in value for the entire financial year. So we need to check this. It should be first for the entire financial year. This threshold limit is applicable for the entire financial year. One thing, another thing is this threshold limit is per employee. So if employer is providing any gift that do not exceed rupees 50,000 per employee per financial year, so in that case, it will not be treated as supply. And since this is not a supply, therefore, no ITC will be available. So when we say employee, who is employee? Whether directors are employee of the company, whole-time directors are employee of the company, independent director, they are employee of the company. So who is employee of the company? So this employee is not being defined anywhere, but we need to check this employer-employee relationship. If this employer-employee relationship is explicitly there in terms of employment agreement, then in that case, the person is treated as employee. Similarly, in case of independent director, he is not regarded as employee as per any laws. Therefore, he cannot be treated as employee. Whole-time director and managing directors, if we are, whatever we are paying to them or whatever income is being given to them, it is subject to deducted tax deduction under section 192 of Income Tax Act, then in that case only they will be considered as employee. So this definition of employee, it has to be kept in mind while claiming the ITC benefits. So coming to the composite supply and non-resident. So GST composition scheme, it aims basically at simplifying the complications for the small businessman. So any small businessman who has a turnover not exceeding 1.5 crore and his GST ranges between 1% to 6%, he is covered under composite scheme. So once you are covered under composite scheme, no ITC will be available. Similarly, in case of non-residents, a person who has taken any registration as non-resident taxable person under section 25 of CGST Act, he shall not be allowed to claim any input tax credit. But the only benefit here is in case if he is importing any goods, then he can claim input tax credit on goods imported. So coming to personal use, that is goods that are being used personally by either by employer or by employee. So when we say personal, obviously it means for private purpose. So no ITC will be there. ITC is restricted in these cases if goods are being used for personal purpose. So section H, clause H covers goods lost, stolen, destroyed, written off. In any case, if goods are lost, they are stolen, they are destroyed, or they are written off. In all these cases, ITC is not allowable. But what if in case of goods are destroyed and I sell the scrap? So in that case, if I'm selling the scrap, GST is charged. So input credit is available. Or what if in case of drugs, that is medicines, if they get expired, and in that case, we return those drugs or we return those medicines back to the manufacturer against raising any invoice by charging GST. So in this case also, ITC will also be available. So we need to check. So there's one more clause that has been added under this section, that is CSR expenditure. So CSR expenditure is a statutory liability. It cannot be treated as gift, first of all. And section 17 subsection 5 has been revised to include the ineligible ITC on expenditure on CSR. So coming to donations and all those goods that are given in the scheme of buy one, get one free. So in case of donations, donations can be treated as supply only with subject to certain conditions. So this condition is basically the name of donor is being displayed. Similarly, it is just like expression of gratitude. So if all those particular conditions as specified by the Act, they are complied with, then in that case only it will be treated as supply and ITC is available. Otherwise, ITC is not available on such goods. Similarly, in case of buy one, get one free. So whenever we say buy one, get one free, since we have paid the output tax liability, therefore, in all these cases, ITC will be available. So whenever any goods are distributed as free samples, whether ITC will be available. So there are different scenarios in this. If goods are manufactured as free sample and are distributed, since no output tax liability is there, therefore ITC need to be reversed. But if goods are manufactured and they are not distributed as, even if they are manufactured as a sample, but still they are not distributed as free sample, then in that case, ITC will be available. So we are already at the end of the session, and I would like to thank TaxGuru for organizing this wonderful session. I'm also thankful to all of the audience who have come in and took their time to understand these new things and to learn these new things. I keep on doing these sessions on a regular basis, and I love talking to new people and to understand how the industry is going, what challenges they are facing in terms of legal compliances. So my contact details are shared here. So in case if you want to contact, if you have any concerns, you can anytime contact me. I'm also available on LinkedIn in the name of Neeraj Bhagat and Company Chartered Accountant. I'm open for all the questions if you have any. So you can share your questions through mail to me or through chat box. So here I'm sharing my office details. So we have 3 offices in Delhi, one in Connaught Place, Karol Bagh, and then in West Delhi. We have our presence in Gurgaon. We have presence in Japan, then Mumbai and China. You can also follow me on LinkedIn, YouTube, Facebook, and Instagram. So you are welcome to follow us as we are regularly doing some good insights on various areas, and we keep on updating our clients through these social medias. So before winding up, once again, I would like to thank all of you. And of course, I would like to thank TaxGuru for organizing this. Hoping this session will have a value addition. Have a good day. Bye.
Thanks, ma'am.